This morning, we're opening up to a bit of a mixed picture of sorts as far as the global cues are concerned. Yesterday, of course, the Indian markets performed much better in the sense that we were in the green throughout the trading session. There was a good recovery when it comes to the banking index as well as the broader markets, and managed to recover substantially from the lows of the day and ended close to the highest point of the day. But the big question that everyone is asking is whether that bounce is going to be sustainable, or is it a sell on rise, kind of opportunity that you really need to look at. That's something that the market is really trying to position itself for. For the day, the global cues are coming in a bit mixed. If you look at the US markets, they closed, with a bit of a red tinge when it comes to NASDAQ, which was down around 43 points. But the Dow Jones was up around 220 points, and the S&P also ended flat. The big talking point globally, of course, is the kind of bond moves that we have seen. In fact, the US Treasury yields has inched closer to 4.8 levels in the United States, telling you that there's a bit of a risk-on rally which is at play. Tandem with that, there is a bit of a mixed skew coming in from Asia as well. There is just around the flat line if you look at the Nikkei as well as the Hang Seng. So not much happening as far as the global indices are concerned at this point of time. And the GIFT Nifty accordingly is, just making up its mind. We're likely to open a bit in the green, but just around the flat line. So not much can be said around that. But the big question, of course, is that we have a lot of earnings lined up. We have important cues lined up. And ahead of that, Nikunj, we are probably going to be sideways. But FIIs, they continue to sell. 8,000 crores is what we saw yesterday. Not really sure if the durability of the bounce that we saw yesterday is going to continue.
So let's first start with the global picture. What do we have in the global market? And we have to point out again and again that the dollar index is at 109. Has the dollar peaked out ahead of Trump inauguration? Or the selling in the yield is likely to have an impact in terms of where the global yields are likely to move? This has not been a good week for global yields. It's just not US 10-year paper, which we use as for benchmarking purposes. It's pretty much across the board now that we have seen yields coming down. In fact, from the US market, the inflation data which comes, the CPI data later tonight, I think would be of intense importance, looking at the way that it would be ahead of Trump's inauguration and it would be ahead of the next Fed policy meeting, which is in January end. So globally, you would say that when we had a bit of a shakeout on Monday, thankfully it is status quo, nothing great, nothing alarming, but nothing great to even rejoice over, because nothing has really moved or turned decisively in the global market. Then let's look at India. What do we have there? A good bounce, but is that bounce durable? Now, for a bounce to become durable, you need either flows to turn, you need news to perhaps change, or you need something on the macro horizon which suddenly will start looking favorable. And I think none of the following were at play. FIs, the sell number yesterday is not impressive. DII, they continue to buy. In FNO, we saw bouts of short covering. So to make a case that we are out of the woods and the markets are looking oversold and now we are just going to be rallying like in V shape, I think it's a difficult proposition. I think the fabric of the market is still weak. You will get pockets in terms of where the market is going to turn, and we'll talk about it. But I think in this chop and churn, rather than focusing on how much more we will go, Aisha, I would urge our viewers that look at opportunities where you can start buying now. It's a time to perhaps increase your allocation to that balance fund. It is time to increase your allocation to that large cap or the mid cap stock which you always wanted to buy. The trick is time.
Yeah.
The trick is time. The minute you say that I want to buy stocks for 3 years, not 3 days, then some bargains would be available. If you're buying for 3 days, then you will get whipsawed here or there. I mean, you may get a bounce today, you may not get a bounce today because markets are oversold, so you have to trade on the long side rather than the short side. But this is a time when you say, I'll extend my time horizon and I'll start investing sensibly. That same point, Aisha, it's not for the first time Nifty is corrected 10%.
Exactly.
10% is like par for course. Do we even discuss the selling of COVID? We don't.
Wow.
The system has absorbed it. Do we even discuss the selling which happened because of Russia, Ukraine? It was 10% plus. It's all absorbed. That's what markets are. What is looking brutal today will look passé. But the trick is time horizon block.
Yeah, and I don't think it's even smacking of capitulation, right? Because pretty much on a daily basis, DIIs are matching up with an equal quantum of a buy as well as much FIIs are selling. So it's not like everybody's throwing in their towel just yet.
So Aisha, what I see changing and which I'm surprised nobody's talking about is that in this kind of a market, IPOs will take a backseat. So if DIs are buying, they were also buying IPOs, right? If IPOs they take a backseat, that same DI which is coming via the SIP route, etc., they may be interested in participating in the secondary market more. So it's not that DIs were not buyers. DIs were always buyers, but it's just that the construct of the money was moving into new issues, QIPs, IPOs, and that's where I expect a pause button. Like I said, the Ringa Ringa Roses should stop, and if that happens, well, I think the money will start coming back into current secondary listed stocks rather than just chasing these primary market stocks. So that's one change I see happening. Second change, Aisha, there are a lot of sectors which suddenly now are showing, signs that they want to come out of their slumber. Financials being one, a lot of power stocks have corrected. So we'll talk about those themes, but yeah, it's a time where you say that sliver of the market is okay. December and we said that entire market was Humpty Dumpty, but I think the Humpty Dumptys had a great fall. It's time to pick up the broken pieces of the Humpty Dumpty and stitch them together now.
Yeah, and I think it was evident on the screen yesterday, with the way not just the Adani names came back, but even some of the blue chip counters like Shriram, which also saw a pretty hard fall in this recent crack in the market. BEL held out very smartly. And then, of course, the likes of a Bajaj Finance, SBI, Tata Motors, it's the blue chips which really made a comeback. The other thing, of course, is that the market sentiment is so fragile right now that it's pretty harsh in delivering its verdict on the earnings. I mean, look what happened with HCL Technologies, for instance, yesterday. The mixed management commentary, visibility for the quarter going forward was weak, and the markets really punished the stock.
There used to be a time when whatever TCS indicated, that became tourism for the entire sector. And that, in a sense, has got a change now. Very divergence response to TCS numbers and a very divergence response to HCL Tech number. I'm not so sure how Infosys reaction would come in, but it's hard to call that, what is in the price, what is not in the price. The logic for HCL Tech is simple, that stock had run up and numbers were not that great. TCS, the logic is that markets were not expecting anything large. They gave some ray of hope, and that ray of hope, in a sense, became a clutch for markets, and it showed out of short covering. We are in that stage of the market where rather than understanding the market or numbers, look at what is in the price and look at what the expectations are. But when you see a fall like HCL Tech, 8-9% when a Nifty 50 large cap stock falls, that just tells you that the market somewhere is in a mood to have exaggerated reaction on the downside. The upside exaggerated reactions are not there, but on the downside exaggerated reactions are there. And I expect this trend to continue when it comes to the earnings season. So if numbers are not strong, I think the markets in the short term are really going to punish you. So result casualties, I think, would be the talking point where you would be reacting to numbers and you would be attacking to numbers. Then look at Adani group of stocks yesterday. Who would have thought that a 10% spike across the board, Adani Power 20%? No news has come. All assumptions have come as to how the Trump regime could be different from the current democratic regime, but that's all hearsay. Okay, they've raised capital and reducing debt by Adani Wilmar, but that does not warrant a 20% spike at Adani Power, 10% spike in Adani Green. So there are two exaggerated reactions in the market. The same market which we're trying to judge from the lens of FII, you saw a casualty, HCL Tech, and you saw a hurrah, which is Adani Green, Adani group of names.
Yeah, absolutely. What a hurrah it was. But HCL Tech being the casualty of yesterday, the stock was, seeing the maximum intraday fall that it has seen in 8 to 9 years. So that's the kind of pressure that we witnessed there. But the other pressure that we have been witnessing and is making headlines more than the equity markets these days is the free fall in the rupee. Every day we have been talking about how that has been hitting a record low. Yesterday as well, it went past the level of 86.60, and now there are people on the street who are calling levels of even 90 on the rupee. It's far-fetched, seems far-fetched, but given the latest commentary coming in from the RBI governor as well, that they are willing to let the market really decide where they want a rupee to head, and they're only going to stop the knee-jerk reactions per se. This is something that the market will have to watch out for as well, because Nikunj, this too has implications, whether it's FII flows, whether it's earnings, and the rupee is something which has become the biggest talking point now.
It had implications on everything, your life, my life, everyone's life, because you're talking about currency here. It's a sovereign currency. Rupee goes down like this, it is not good, it is actually bad, and it's going to have impact both in terms of how the macro would move and how the positioning would move. It's not only about, rupee goes down, FIs, they start selling. No. It's beyond that. rupee goes to 90, then assumptions what you had at the beginning of the year in terms of fiscal deficit, crude import, trade deficit, all that changes. So whether the Reserve Bank of India would intervene to protect the rupee, or this is an interplay of what is happening to other emerging market currencies, I can bounce back and say that, okay, rupee has fallen less, other currencies have fallen more. But the bottom line here is that you have to look at everything in terms of where the impact analysis would be. Now, what can RBI do? Look, we've not got any kind of a very obvious statement from RBI where they've used the word that we would defend the rupee, and nor have they indicated that we do not want to intervene. I think there would be a backroom response by RBI, which is what they are doing, that they want to curb the volatility low. For rupee to stall falling or stop falling, dollar has to stop rising. So you may want to make a case that the interplay between long dollar and short emerging market currencies is not going to be forever. No one saw that coming, but I think it should reach its climax very soon. That's what I feel. But if rupee nears 90, then I expect Reserve Bank of India to come up with slightly more clearer messaging in terms of indicating to the market that hum khade hain. Right now Reserve Bank of India is only saying that, look, we are managing backroom and we are watching the rupee and we are doing whatever it takes in terms of periodic intervention. But with $600 billion of forex reserve, the rupee, if it goes below 90, then it could be a problem. And that's where I think Reserve Bank of India will have to be not just a backroom operator, they will have to come and hit on the front foot.
Okay, that's the take on the currency, but let's see what.
If you like this video, then like, share and subscribe to ET Now.